Welcome to episode 42 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week we bring one stock, one headline, and one reason investors should care.
This week, we're making our cases for sectors set up to outperform the broader market in 2026, driven by a combination of macroeconomic factors and secular trends.
If there's one word that's gripped the investing world in 2025, it's AI. But it's not just a buzzword anymore. Companies leveraging AI for automation, data analytics, and machine learning are seeing explosive growth.
The space sounds quite prospective, John. So how about a stock to get our listeners' due diligence processes started?
You've heard of the big players, Trevor, but Kinaxis, KXS on the TSX, is worth a look, as this business helps keep today's complex global supply chains running smoothly. Its AI-powered platform, Maestro, helps give a clear view of everything and the flexibility to adapt fast, whether you're planning years ahead or dealing with the last kilometer delivery.
Okay, let's delve deeper, John, by asking, how should individual investors size up the opportunity?
AI's adoption is accelerating across just about every sector we've seen. Kinaxis offers direct AI exposure within a well-established software platform. That makes it one of Canada's most successful publicly traded AI-centric companies out there.
Okay, I hear you. But tying it all together, I'm compelled to ask, how accurate has the market been at reflecting Kinaxis's leadership position, as well as untapped potential?
It seems fairly accurate. Kinaxis has shown some consistent growth. In Q3, it saw a 10% revenue growth and posted a 15% revenue increase back in Q2, along with record EBITDA and a strong customer retention and pipeline expansion. Analysts project its revenue will grow from approximately $483 million US last year to $1.1 billion US by 2029. That implies a potential stock appreciation of up to 100% over 4 years. KXS stock is up nearly 2% since the beginning of this year. In December, it has traded between 170 to 179 Canadian dollars, FYI.
Follow-up for you, John. You mentioned supply chains. So I'm wondering, how have U.S. tariffs impacted Kinaxis's business?
Well, U.S. tariffs and the other geopolitical pressures have pushed most companies to speed up their AI adoption, but there's still a big gap between ambition and execution. Nearly all firms are experimenting with AI, yet only about 20% can make real-time decisions, and just 22% have a clear strategy. Those that do see much better ROI. While leaders expect quick returns, most organizations lack the data readiness and governance to make AI truly effective. So in short, tariffs are driving urgency, but turning AI into real resilience is still a work in progress.
Inquiring minds want to know, is Kinaxis a lone wolf in the Canadian AI space?
No way. There's several companies I was looking at to choose from. Other names to look out for: Docebo, OpenText, and CGI Inc. Now, AI still feels like it needs to prove itself out there, but Trevor's going to tell you about the real king of the castle, and it's golden.
That's right, John. My sector worth keeping tabs on in 2026 is gold, with investor optimism across the mining life cycle surging thanks to the metal testing record high prices.
Now, this is the bread and butter for the company we work for. So where are we at the end of the year?
Let me lay it out for you, John. Gold is currently trading for more than $4,300 US per ounce, has appreciated by about 63% year over year and about 128% since 2020, supported by a varied basket of worries, including the US's deepening deficit, the ongoing Russia-Ukraine war, fallout from Trump's tariffs, as well as central bank diversification away from the US dollar in a bid to minimize volatility.
I see. So now, breaking it down to the Joe Blows out there, why does this huge picture matter for the individual investors?
Absolutely. Well, top institutions, including Morgan Stanley, JP Morgan, and Metals Focus, expect gold prices to continue rising into 2026. Metals Focus specifically postulates a price of $5,000 per ounce by year-end 2026, and all of this grants investors a runway to potentially benefit from fundamentally sound allocations into explorers, developers, and producers whose high-quality operations suggest the potential for leverage above fluctuations in the gold price.
Nice. Now, how accurate would you say the market has been at reflecting the gold sector's potential so far?
Understandably, investors have gravitated towards producers the most, whose cash flow is a more transparent reflection of operational leverage compared to mine development milestones or high grade drilling, which require a more, shall we say, esoteric perspective for the purposes of putting a valuation together. The takeaway here is that earlier stage companies may offer greater bargains for investors willing to delve into exploration results and economic studies to build conviction.
Now I'm going to put you on the spot. Is there a gold stock out there that stands out to you for investors to consider to get their watch list started?
For sure, I'll even quadruple that ask and give you four. They are explorer Suriname Gold, developer Osisko Development, and producers Monument Mining and Robex Resources, each of which are on clear paths to growth in 2026. Listeners can learn more about this quartet of stocks in this week's Stockhouse Gold Report.
And as always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is a journalistic opinion piece which has been written based on independent research and is intended for informational purposes only. For full disclaimer information, visit themarketonline.ca/disclaimer.